Alright everyone, Cowboy Trades here, welcome back to the channel for another news update. Now, I was just about to record a TA update for both Bitcoin, the cryptocurrency markets, and the equity markets when I found some new economic data. So this is in the form of the US CPI month over month being revised and amended for the entire year of 2022. Now, this came out over on Friday when the Bureau of Labor Statistics re-updated the CPI. And if we do come down to the raw numbers for 2022 on how this was revised, you can basically see the months down here, you can see the original data and then the revised data. So basically I'll just show you the past 3 data points for this. You can obviously look at January to December if you want. The reason I'm showing you October, November and December is because if you look at the equity markets and the cryptocurrency markets, these have all been rallying in the last few months based on the markets pricing in that inflation was quote unquote dropping faster than anticipated. However, the revised data shows us a different picture. If we start off with the month of October, you can see this was originally coming in at 0.4% versus the revised data at 0.5%. November, original data 0.1%, revised data was 0.2%, and in December this was meant to drop by 0.1%, and this actually came in at 0.1%, which is where you get this 0.2% miss in the CPI after we get the revised data. So this is definitely not good for inflation, and this is definitely not good for the markets, because obviously the markets for the past few months have been pricing in the fact that inflation has been dropping to the downside. So now we would obviously, if the markets are moving rationally, when the markets do open back on Monday, we should be expecting a further drop back down to the downside. Bear in mind, basically, when this data came out on Friday, this literally came out almost on the apex of the trading session. So the markets really didn't have too much time to move because of this, but I will show you a few charts in just one second. One other thing that I did want to talk about before we do that is Fed commentary that we've had in the past few days. Now, the most recent Fed commentary we had from a couple of Fed speakers came out on the 8th of February. So do bear in mind, this was 2 days before we had the amended CPI come out. But even before we had amended CPI coming out hotter than the original forecast, we had Fed's Kashkari saying expect Fed funds above 5% at some point this year. We also had Fed Williams saying the Fed still has work cut out for it on inflation, and that he expects a peak rate of between 5 to 5.25%. More specifically, he said this is a reasonable view. Now, obviously, right now, we're sitting at 4.75%, and the last month we had a 25 basis point increase from 4.5 to 4.75. So this would basically be suggesting that we've got about another 2 months worth of further 0.25% increases, and this was based on, the information they told us on the 8th, before CPI was readjusted and amended to be higher than the original numbers. So once again, it looks like the Fed are currently sitting in a relatively, they're moving away from hawkish territory at this moment in time. But it's looking, more likely, as inflation is now re-amended, that we might see, further 25 basis point increases. Maybe next month it will be a 50 basis point increase. I'm more on the fence that it's more kind of likely that we're going to see a couple of 25 basis point increases, moving into around about 5.5% terminal rate, where we're probably going to sit here for quite some time before breaking to the downside. When Fed finally do start lowering the interest rates. Now, they've been saying for a very long time that, it's likely that we push up to 5.25%, and this was before we had the amended CPI data come out. And they've also been saying we need lots of economic data showing us that inflation is dropping before we can start lowering the interest rates. So I think it's very, very likely we see something like, what happened in 2018, where you see, or, come back over to, December, or sorry, not December, if you come back over to what happened 2007, 2008, we spent a relatively decent amount of time sitting in this area from the 1st of June all the way over to, so you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You basically sat here for over a year at the same Fed rate. So I do think something like this is once again going to happen. And the Fed has been saying that we're not going to cut rates in 2023. So it's, in my opinion, likely we come up to 5.25% or 5.5% and reside at this area for all of 2023 before coming back down to the downside. Now, like I said, this data that we had on the amended CPI literally came out right at the apex of the trading session for the equity markets. So the equity markets really haven't had much time to adjust and react to this current price action. However, if we do come over to the apex of the trading week, you can actually see that US government bonds pushed up very, very strongly on Friday. If we come over to the weekly time frame, you can currently see that we're sitting at this area of resistance at this moment in time. But on the monthly time frame, you can see we are in a very, very clear and very nice bull flag at this moment in time for government bonds. If government bonds, well, of course they're going to open on Monday, but I do believe that government bonds are going to push out of this bull flag coming into Monday. And of course, if you know how these work, these trade inverse to the equity market. So if we continue seeing government bonds push up, it's very, very likely that we're going to see the equity markets break down, your cryptocurrency markets break down. And of course, with the next FOMC meeting around the corner and with amended CPI coming out, it's not looking good for the markets at this moment in time. So that's all I've got for you. Just wanted to give you a quick news update. I am about to record a TA update, so I'll see you over there. That's all I've got for this video. If you enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends. It's been your boy Cowboy Trades. I'm out. Peace.